Some chemical companies, especially the ones tied to agriculture and food production, tend to be stable, other than being tied to a commodity of natural gas. And a company that I wanted to cover today was CF Industries. CF Industries produces the fertilizers that farmers need to grow their crops. They take natural gas and then turn it into fertilizers. It's in consistent demand year after year. The question always is, what's the commodity worth? If the commodity price is higher, CF Industries makes more money. If it's down, they make less money. This is a dividend payer. So I like that aspect of CF Industries. I also like that they've been around for a long time. They have a reasonable market cap, and all things look reasonable on this stock. I wanted to take a look at the stock. It's a couple weeks after the earnings came out, and the stock market didn't quite like their earnings. So I'm a little bit concerned of what's going on with the company. I wanted to look at their financials and their fundamentals and revalue the company and decide whether I should buy more shares, hold, or sell my shares in CF Industries. Before I jump into the analysis, let me just remind you that I'm an individual value investor and I evaluate companies. And I like sharing my analysis on YouTube. I'm not recommending you buy CF Industries or you sell CF Industries. And I'm not providing any financial advice. So let's take a look at CF Industries. So to begin with, this is about a $14 billion market cap company, and they produce about $6 billion of revenue. So you're paying a little more than 2 times revenue for the company. They are consistently profitable, which is good, and they pay a dividend of 2.6%. A number of analysts cover the stock, and they have a hold rating on the stock and believe that it's a little discounted. Part of the reason is because year to date, the stock is down 4.4%, which is disappointing because the rest of the market's up almost 12%, while this stock is behind by about 4%. So it's interesting that within this industry, they're not doing so well. So let's take a look at the income statement. And it looks like they've been growing year after year, but then in 2023, the revenue really went down. And I believe it's the commodity price that really fell down on CF Industries and really reduced their revenues. So that's interesting. I knew that buying into the stock, and I expected that the commodity prices would rise, especially since oil prices were really creeping up. So it'll be interesting to see the first quarter earnings and see how they performed and see if that trend is changing. This is a cash flow generation company. They consistently have driven free cash flows. The free cash flow over the previous years has really looked good, and it fell to some extent in 2023. I used a lower amount that's more consistent with 2023 in my valuation for free cash flows and for the valuation based on free cash flows. The earnings per share for the company, 15 analysts cover the stock. There's a hold rating, but they all believe that collectively, on average, that the company is discounted by about 10%. The earnings per share is 638, is expected this year, and it's not going to grow much. It's actually going to go down a little bit next year and then grow 4% the year after. So consistent earnings per share, and I'm going to use that information for my valuation based on earnings per share. When we look at the balance sheet for the debt to EBITDA, the company has a debt to EBITDA of 1.27. That's a very good ratio. That means the balance sheet's in really good health. So solid balance sheet. And let's take a look at the first quarter earnings. CF Industries released their earnings for the quarter that ended March 31st on May 1st, and the market didn't like it. The stock's been selling off, and it's priced lower than when they issued out their earnings. And usually for highlights, the company puts out, the positive news on the company. You don't see revenue on any of the positive highlights. It usually means, well, that's probably bad news. So I'm eager to get to the income statement. Some positive news is they do have free cash flow, which is positive. They did repurchase some shares, which is positive. But let's get down to that income statement, which would really tell me a lot about the company and how they're going. So looking at the first 3 months of the year, sales really did drop. They dropped for the company, about 25%. That's a big drop. So that's really concerning. And the balance sheet stayed pretty solid. The statement of cash flows is good, but that drop in sales could really be a concern for me. I like companies' top line revenue. To me, tells me the company is operating well. Customers like their product or service. The business is operating well enough to distribute their product or service really well. And the drop in revenue is really concerning to me. So what do I think the stock price is worth for CF Industries? Well, I'd like to take a look at the free cash flows the company produces and look at a forecast of all the cash flows I expect the company is going to produce, discount those free cash flows to today's value. I'd also like to look at earnings per share and do a valuation of earnings per share that I expect in the future and do a valuation of earnings per share. Starting with free cash flows, I'm going to use the trailing 12 months that the company has in free cash flows, which is $1,380,000,000. And I'm going to grow those cash flows by 2% in the first 4 years. And then all years after year 4, they're going to grow at 2% as well. That gives me a forecast of all the cash flows that are expected out of this company. And I'm going to discount those cash flows by 10% to get to a net present value of $16 billion for all those free cash flows. I'm going to add the cash and take away the debt to get to an equity value. This is the equity value of the cash flows plus cash minus debt of $14.9 billion. Market cap's 13.9. So it offers a 7% discount if you value the company based on free cash flows. Earnings per share is expected to be $6.38. I'm going to use a PE of 12 and grow those earnings per share by 3%. I get a stock price value of $78.86, but the current stock price is $76.22. So there's a 3% discount using the earnings per share method. When I combine the two, putting more weight in the free cash flow method, I get a 6% discount on CF Industries stock. So should I buy, hold, or sell CF Industries? Well, I'm going to look at 3 areas. First, I really want to buy into the company, really feel like I really like the company. I like the management team, and I want to be a part owner. Second, I want to look at the balance sheet, make sure it's quality balance sheet. And then third, I want to look at the discount. First, the company. I like the industry. I like that it's a more stable industry within chemical. I like that, farming isn't going to go away. Food production is not going to go away. So it's always going to be in demand to get these fertilizers. The piece that I do not like is that I think the company has underperformed and it somewhat surprised the market and surprised me, frankly. So I don't know that I'm bought into the management team. It's hard to really accept that the stock price is down when other companies similar to this are doing well and the market as a whole is going up. So I'm not completely bought in on the company. The balance sheet. The balance sheet's a really good quality balance sheet. No problems with the balance sheet at all. The discount. Not a very good discount. Considering that I'm not bought into the company, I would expect a much higher discount in order for me to take the risk of buying a company where I think the management team could have done better. Therefore, I'm going to sell my shares in CF Industries and just get this position out of my portfolio and just watch the company. It doesn't cost me any money to watch a company, see if they can repair their business and get back on track with the way that they should be running their company. This is a dividend paying company, and the dividend that I get from CF Industries is $258 per year. On a monthly basis, it's about $21 per month. So not a bad dividend. The value of the stock that I own is $9,831, but I paid $10,137. So I pretty much have an unrealized loss of $306, about a 3% loss. I'll be selling the shares on Monday, May 20th, and just getting this out of my portfolio for the time being. I'll watch the stock and see if the company gets better. Hey, thank you for watching the video on CF Industries. I hope you found it interesting. I'd love to get your comments on what you think this company is worth and what you think about the stock overall. Thanks again for watching. Good luck investing.